All right, everybody, welcome and thank you for joining today's webinar, Online Program Management and Public Policy, Understanding the Future of Digital Partnerships. My name is Shandy Thompson with Wiley Education Services, and I'm happy to be joined today by our presenters from an array of organizations, with special thanks to OPSEA, 2U, and HolonIQ for co-hosting this presentation with us today. Before we get started, I do want to review a few housekeeping items. All attendees will be muted during the webinar. However, we do welcome your questions and comments. Please type your questions into the Q&A pane. A moderator will respond to questions there, and we will reserve time for Q&A at the end of the presentation today, and we'll be forwarding your questions. We do have a variety of handouts for you to download in the handouts section, and that does include a copy of today's slides, so please check that out. And lastly, a recording of today's presentation will be sent to all registrants via email tomorrow. And with that, I'm going to turn our discussion over to our moderator, Julie Uranus, Vice President of Online and Strategic Initiatives at OPSEA.
Thank you, Shandy. Friends, as a senior management team member at OPSEA charged with all association content for online professionals, it's been my distinct pleasure working with our esteemed colleagues on today's session. As many of you know, OPSEA is the longtime association for post-secondary online leadership and strategy, both due to the networking and content present in OPSEA, but also due to its members, many of whom incubated online learning and continue to advance the field. I hope you share my excitement for today's conversation focused on the intersection of OPMs and policy. Now, I'll be back with you in a little while during our Q&A period, so feel free to add your questions as we go along to the questions box in GoToWebinar. And as I put myself on mute, I'd like to ask Dan to kick us off with a brief introduction, followed by Greg and Patrick.
Thank you very much. I appreciate you all putting this together, and I appreciate Greg, Patrick, and Julie for your participation. My name is Danny Sepulveda. I'm the Vice President for Global Government Partnerships and Public Policy at Wiley. And prior to that, I spent 20 years in public service.
Hi, I'm Greg Ferenbach. I'm Senior Vice President at 2U. I'm an education lawyer and was a longtime outside counsel to 2U, but also to many universities. Before that, I worked at Strayer Education, and before that, I was general counsel at the Public Broadcasting Service.
Afternoon, everybody. Patrick Brothers, co-CEO of HolonIQ. For those who don't know us already, we're a global impact intelligence platform. We work across education, healthcare, and sustainability. We're very privileged to work with US universities, all major OPMs globally as well. And so pleased to be here for today's conversation. I think I'm going to jump straight in here. Perfect. So I'm going to spend just a few minutes before handing over to my colleagues here to kind of set the scene. I'm going to talk about strategy and capability, not about policy and regulatory. I'm going to leave that to Greg and Danny. If we can jump onto the next slide. As I mentioned, HolonIQ, as I'm sure many of you are aware, we've spent a lot of time drilling into public-private partnerships in higher education. We maintain a data set of over 1,000 academic public-private partnerships, mostly in the US, but around the world for benchmarking purposes, including over 10,000 OPM-backed programs, or again, for those who we work with or follow our work, we've expanded that definition. We call it OPX now to try and capture the diversity and digital transformation that's happening. I just wanted to start really quickly with our open source digital capability framework. We developed this framework with hundreds of universities in the US and around the world, perhaps starting with some frustration about the simplicity of a conversation that was probably labeled on most agendas around the world as in-source versus outsource. What we heard from institutions was a desire to reframe that conversation around capability, to reframe that conversation around the learner as well. And so this open source capability framework looks from left to right, everything from building products and strategy, marketing processes, recruiting students and enrolling them, through learning design in this new digital age, learner experience, through to work and lifelong learning. And we've seen innovation across this entire spectrum. But the purpose of this framework was to elevate a conversation that was often stuck in an in-source versus outsource arm wrestle to a more sophisticated strategic conversation around what capabilities institutions needed in order to serve learners better in this new age. On the next slide, we worked with many of our institutions, and again I mentioned before, all major OPMs are customers of HolonIQ. We're very lucky to work really closely with the whole ecosystem and government as well. Was the decision around whether to buy, build, or partner these capabilities. And again, looking for a more sophisticated approach to that conversation. If you think to the previous slide, it was which of those capabilities should we perform? Which of those capabilities should we build because we need from a long term, and which of those should we seek to partner in order to deliver? And with respect to OPMs, obviously, you're partnering with an organization that has an incredible breadth of those capabilities as well. And as you can see on the right-hand side here, we wanted to frame that conversation and that decision for institutions and OPMs on a more sophisticated set of axes as well. And those were risk and digital capability. Not always the primary axis for the conversation, but again, in trying to elevate that conversation to one that is more sophisticated. A whole bunch of considerations there. Again, I'm sure we'll cover off on some of these as part of the policy and regulatory piece. Nearly there, and on the next slide, before we pause, you'll hear us talk about academic public-private partnerships. Public-private partnerships are not foreign to universities, of course. They've been used and explored across a number of domains, mostly on the infrastructure side. But what's fascinating about public-private partnerships in our research is that they are much closer to the student now in supporting universities in their core mission of supporting learners around the world. And that buy, build, partner decision essentially coming to the fore in what we think is, and what we're seeing is, the evolution of academic public-private partnerships to represent a whole of digital transformation partnership as well. We've seen this evolve in healthcare and infrastructure. We feel, ahead of where education has been, and I think as a consequence of COVID, and we'll see now on the next slide, my final slide, just the growth in academic public-private partnerships that we've seen around the world. So we track this. I think we're the only firm globally to really track this, definitely at a global level, but most of this data is coming out of the US. There's no doubt the US is the global leader in this respect, but you can see here since 2010, of which there was 23, formative academic public-private partnerships. And here we mean it's not just a contract for support on one specific capability you saw in that matrix. It's a broad partnership across a number of domains and capabilities. We've seen that really expand. It's important to note, I'd like to remind everyone that every single one of these is decisioned by a president, vice chancellor, dean around the world in order to enter into these public-private partnerships. The growth that we've seen, this chart is actually, I should have updated this, it's a little bit old. It's grown even further since we updated this in Q1. We're just about to release our Q3 results. And now it's starting to broaden, as we've all seen, across boot camps, across pathways and international education as well. I'm going to leave it there. I hope that was helpful in setting up a conversation on policy and regulation in this space. Thanks for having me today. I'm going to hand over to Greg.
Yep, thank you, Patrick, and thank you, UPSIA and Wiley, for putting this together today. Before we get to where public policy might be heading, I thought it would be helpful to look at the existing regulations, because they have been around for about 10 years or more, and in some ways they shape the contracts and the business relationships that we currently have. Next slide, please. So the big one that you read about a lot is the bundled services rule. And the background here is that if you want to do a revenue share, as many OPMs do, as 2U does, and as many other ed tech companies do, and you want to include recruiting as part of that contract, then you need to follow the policies of the Department of Education, which are quite clear and prescriptive, and are really follow on to a safe harbor that existed before. So we're talking about 20 years really of precedent and policy that shapes these contracts and shapes policy in this area. So the department says, per its current policy going back to 2011, that you can only do revenue share, which would otherwise be viewed as a kind of incentive compensation, if 5 conditions are met. And I've laid them out here on this slide. The key one here, I think, is that a bundle of services has to be provided. So it can't just be like marketing and recruiting and maybe one other thing. The conventional wisdom is the bundle has to be marketing, recruiting, and then a couple other things that are significant. And usually that there's a technology component, and different OPMs have different things in their bundle. And so that's what you see in these contracts in most cases. And you see it even in fee-for-service types contracts where 2U does some of that too. There's still often a bundle of services. And so this is where that comes from. The other thing that is important, and I think often overlooked, is that this bundled services policy of the department really dovetails with what the accreditors require. That's not in this bundled services policy because it's separate standards of the accreditors, but the accreditors are the other ones that shape what you can and you can't outsource. And the most important aspect is that you can't outsource anything that's core to your academic functions. You have to maintain oversight over that. Next slide, please. So there's a number of other federal rules that I just wanted to hit on that are important. The first is there's a concept in the federal student loan rules of a third-party servicer. And that's a third party to whom you outsource the administration of Title IV aid. And if one does that, then there's a lot of bells and whistles that come with it. You have joint and several liability to the department. So the legal nexus with the department isn't just through the institution, it's also direct to the third-party servicer. There's a lot of additional things you need to have in your contract. There's all kinds of reporting requirements. And all of this is really set up to make sure that Title IV aid is handled responsibly. Most OPMs do not get involved with Title IV at all, and this is one of the reasons, and that's often quite clearly laid out in the contract. There's another concept in the federal rules called written arrangements, and this again is sort of a limit on outsourcing. And what the department says is you can outsource up to 25% of a program to a non-Title IV institution like an OPM. If you go above that 25 to 50%, you need to get approval from your accreditor, and you can't do above that. But the way that's always been interpreted is instruction. You can't outsource the entire program, the teaching of that program. Misrepresentation, of course, is an important concept in many contexts and here as well. And usually the way that's divided up in these contracts is is that the university has the final say on any way that it's described, and it gets to sign off on that, and that protects the university, and then that protects the OPM as well. Privacy is built into all these contracts, standard language around FERPA and whatnot. And then you often see provisions having to do with state authorization, which is something that 2U helps institutions with, but not all OPMs do. And also around accreditation, usually it says something that accreditation approval, if necessary, and any other aspects of accreditation are solely the province of the institutional partner. So all of these get built into the contracts and built into the business model. I did an article a number of years ago, I've cited at the bottom of the page, that I wrote for UPSEA from the institution's perspective. And I went back and looked at it, and I think it holds up pretty well. So I recommend it to you to take a look at it and file away as you work on these kind of arrangements. Next slide. So that's the existing framework, which is pretty well established. And the question now is, like, where do we go from here? Next slide. So first thing to know is that the federal rulemaking process is a long one. We're talking about a 2-3 year process. It's quite involved. It starts out with the department putting out a notice saying, these are the things we're thinking about doing rules on. What do you think, public? And getting some feedback. And then it issues a further notice saying, okay, we're going to stand up what's called a negotiated rulemaking committee, which is something it's required to do by statute, and to get constituents from across higher ed, to come to the table under the department's auspices, see if they could hammer out a rule in that area. Then the next step is they frame up a rule, and then they put it out for formal public comment. And then finally, the OMB, Office of Management Budget, takes a look at it to make sure it's consistent with the administration's other policies, makes some final tweaks, and it becomes a rule. Two things that are important for our purposes today is that there are opportunities for institutions to participate in this process, and it's important that they do, because the department needs to hear from people who have actual operational experience with doing online programs. And so you can join in this process by becoming a negotiated committee member, which is a long and difficult process, but a rewarding one for those who really want to be involved in this. And then you can also, as an institution or through an association, you can file written comments to the proposed rule that the department finally comes up with. And those can be important too. You're not likely to change the overall direction that the department's going in, but you can help refine it. And you see again and again in why should I bother? The department's already made up its mind what it wants to do. But the devil really is in the details, and so institutions can really help by filing comments. The other thing that's important here is that this process is really is controlled by the Department of Education. They call it a negotiated rulemaking, but the way it works is the department decides what the agenda is, it picks the committee members, and if there's no consensus of the committee, the department can do whatever it wants. And so there's a lot of opportunities to game a system like that. You can simply pick committee members who you know are never going to agree on anything, and then inevitably you get to pick what the rules are. So it's once this process gets going, it is really controlled by the Department of Education. Next slide, please. So this is a little timeline of where we are now. The department issued its first, its initial notice about topics it want to do rules on, and then it picked issues around student debt and loan forgiveness and whatnot as its first committee, its first set of rules. those rules are, that rulemaking committee, excuse me, is kicking off now. And then that will result in rules in late 22. They have to be done by November to go in effect in the next year. And so they'll probably become effective in 23. So that sort of gives you a sense of how long this process takes. The next slide, please. So then the big question is, okay, the department said that anything it wasn't covering in this first rulemaking, it may take up in a second rulemaking. And so it looks like the second rulemaking is not going to be so much about students and student debts and loan forgiveness and that kind of thing. It's going to be focused more on institutions themselves. And it's going to be similar perhaps to the program integrity rulemakings that the Obama administration had. So it's kind of a guessing game now about what they're going to cover and what they're not going to cover. I'll just hazard a guess that they are likely to cover some things that are more closely aligned with for-profit issues. The standards of financial responsibility that the government uses to measure the financial health of an institution have been criticized. The Trump administration actually wanted to look at that so that you can get like an early warning system. If the school is going to go out of business, that's going to hurt the students. So they want to recalibrate how that's measured and watched. 90-10 is the rule that applies to for-profits that says you can only get 90% of your revenue, only 90% can come from federal sources. That's being changed in the statute, the Higher Education Act or other law, and then that's going to cause a rulemaking with the department. They've already said they're going to do that. So that's not just likely, but certain. And then there's been controversy over the last few years about changes of ownership rules, how transparent they are, whether there should be any public input in them, and in particular, these conversions of for-profits to not-for-profits. It just seems likely that's going to be on the agenda one way, shape, or form. There's a number of things that are possible. Anything that wasn't covered in the first set of rulemakings and that was mentioned in the department's initial notice of like 14 items certainly could be on here, but also anything else that was mentioned by the public in those initial hearings in May. I do think there's going to be some things in this general category of institutional capability. It looks like there's going to be a sort of son of gainful employment of some kind that has to do with accountability measures by institutions and not just for-profit institutions. That could also include, some provisions that relate to digital partnerships. I think there may be changes in that same vein around accreditation. And we might even see the return of state authorization, which is kind of unbelievable because we've been talking about that in higher ed for over 10 years, and those rules never seem to settle down. The areas of concern that we have at 2U as an OPM are, of course, any changes that would affect our partnerships, and in particular, changes not to just to the federal rules that I mentioned in my first slides, but to the rules that the feds apply to accreditors. So the Department of Education could say, well, substantive change, for example, includes any OPM contract, and therefore the accreditor has to go through an elaborate process to review and approve any contract with an OPM, that sort of thing. Next slide. So we have a little bit of a clue about, the areas of concern by what the student advocacy groups put in their public comments. And it's interesting because the issues that they raise go to all of those federal rules that establish the current framework that then informs these contracts. They want to look at incentive compensation and bundled services. They want to redefine a third-party servicer of financial aid to include an OPM, which would be a pretty radical change, probably not something the department has the authority to even do. They want to revisit state authorization and essentially SARA. The theory there is that the department kind of gets to decide what counts as a reciprocity agreement, so they could dictate SARA's standards more than they do. They want to redefine what a written arrangements are so that they include all kinds of other outsourcing and not instruction. And then they'd like to see greater transparency to students of an OPM's role, because that's, you know, there's not really a consistent practice around that. Some institutions, you know, view the programs as they're their programs, to be kind of their business to disclose whether and to the degree to which an OPM is involved. So I don't think that last one is particularly controversial, but some of the others, although they seem like they're kind of in the weeds of Title IV regulation, they would actually cause a lot of changes to be made to these contracts and to some of the ways that they are operationalized by institutions and OPMs. And I think that's my last slide. Oh, I'm sorry. Couple other things. We're looking at the federal rules here, but that's not the only game in town. Next slide. We see some of these conversations going on in parallel with the accreditors. An example of that is that WASC in California is going through a process of reviewing its rules around outsourcing, which is interesting because they already have the most detailed and prescriptive rules around this of any of the accreditors. And so one suspects what they're kind of doing here is trying to get out ahead of federal regulation by taking care of these issues themselves. Next slide. And then finally, at the state level, the states are another area, almost a laboratory for trying out ideas that could also be implemented at the federal level. And if they don't get implemented at the federal level, the advocates for them will try to get them done at the state level. So for example, a number of years ago, we saw some attempts to change California law to get rid of the bundled services rule that fizzled out. But a more recent example is a bill or series of bills that was introduced in New Jersey last year, and then the time kind of ran out on them. But they're interesting in looking at the sort of transparency and disclosure requirements that would be required of institutions about OPM relationships, including information about graduation rates and student debt metrics, et cetera. You know, could these kind of bills be the blueprint for things the federal government might propose? I think that's certainly possible. And even if they're not, they may try to, you know, push them through at a state level. So we watch these state laws carefully. 2U does a lot of work, as I mentioned, to help its partner institutions with state regulation. So this is on our radar as well.
So thank you all very much for setting that up. And Greg, that was a really excellent walkthrough the current regulatory situation and what's coming next. So taking a step back, from Wiley's perspective, we feel like it's an incredible privilege to be able to be involved in this space, and it is and we accept and welcome the interest that policymakers are taking in this space. It is no longer novel. particularly in post-pandemic, and how the realization of online education becoming a critical component part of higher education. That realization has now gone beyond the community of folks who probably listening to this and participating in these conversations and have for many years, and is now of general interest. And so what does that mean? That means that you're going to see more stories in the press, more policymakers who are generalists, so senators or members of the House, and the department think about what is the proper role of online education in the broader higher education system, and then separately within online education, what is the proper role of private sector OPMs and their relationships with nonprofit and public institutions in serving students. And our primary goal is to ensure that whatever decision policymakers make, whether it's at the state level, at the federal level, within the department, or in the legislative branch, is well informed. And that should be well informed in part by administrators who work on these programs and have engaged in the decision making about whether or not to, I think it was buy, build, or I forgot what the other one was. And to the degree that, it was a buy, build, or partner, right? And for different institutions, if you look at the way that Patrick's layout of the component parts of the entire experience of a student going through an online program, the 4 component parts, for different institutions, different options will make more or less sense, and they may make more or less sense depending on the point of evolution that institution is in. We very strongly, in part because 70% of our partners make the bundled services option their chosen solution. 30% do a fee-for-service basis, but we believe that those options should be available in the market. That the guidance letter that came out of the Obama administration enabling bundled services should be preserved. To the degree that there's change, and there will always be change, we would want, like I said, that change to be informed by those who are participating in it, thinking about what impact that change would have on the institutions and the students that they teach or serve. And our role is to serve the institutions and help those institutions serve students. So as we move forward, the degree to which the voices of the folks on this call will be engaged is critically important. In addition to the things that that Greg rolled out, the House of Representatives, the Committee of Education, has asked the Government Accountability Office to take a look into OPM programs. So we expect that report will come out at some point, probably by the end of the year, maybe early next year. And that will trigger hearings, at least in the House, on the future of OPMs in the market. You'll also see the department, as Greg pointed out, is within its capabilities of revisiting either the guidance letter or looking at it through new rule. And this administration is an activist administration, as you can see across the board on pretty much every area of public policy. So we've engaged them and we will continue to engage them. But again, our position in the market and our position in the conversation is only one stakeholder's view. And it's probably not even the most important stakeholder's view. The most important stakeholders' views are going to be the institutions themselves and students. And so as we move forward, we want to make sure that you have the tools and resources necessary to participate in the conversation, that your views are brought to the table, and that we move forward in a way that everyone can embrace what is an inevitable evolution in the higher ed space, and that we can participate in that process and participate in that ecosystem in a way that serves the best interests of our clients and their students. So with that, I think we can open it up to questions.
We can. Thank you, Patrick and Danny and Greg, so much for your insights. And friends, you're always welcome to add your questions to the Q&A box. We're also watching the chat feature, but we did receive a few questions that came in through the registration process. So just so you know, we do watch those, and so you're always welcome to submit those if you have an opportunity. So I'm going to kick us off with a question. I'm going to ask Greg to tee up on this one. If federal regulations do change, how will that impact contracts that might extend through the change effective date?
Yeah, sure. Well, first thing to know is that if there are changes that affect the contracts, they're not going to be in effect for a while. At the earliest 23, I think more likely 24. And the department has some discretion in setting the effective date anyway. So it could be even further out. I mean, we saw that, I think, a few years ago with state authorization. They said, okay, we got, you know, these are the new rules, but you have a year or two or whatever it was to come into compliance. The other thing is we're going to have a better sense of what's going to change, you know, in the not too distant future within the next 6 months. So there's plenty of time for planning. But the rules, when they do become effective, you'll need to change the contracts to, you know, to be compliant with them on their effective date. And so that's why, you know, if there are rule changes, I think the department will, you know, understand that, and they'll allow time for those, you know, negotiating period to go on. They can't make rules that are retroactive in effect. That would be unconstitutional. So this is all going to be on a prospective basis. And also typically in these contracts, there's boilerplate about, you know, if there's a change of law, you know, the parties have to come together and have a negotiation, whatever it says. And so that will also, you know, shape this process. I mean, I think that, you know, these businesses are, you know, going to be around a long time. And regardless of how or if any of these laws change, they're gonna adapt to them, and their institutional partners are going to adapt as well. So I don't think it's like a, oh my God, we're going over the cliff situation.
Great, thank you. The other one that I'll share from the registration process, and I'll ask Danny to answer this one or to kick us off, is when might bipartisanship for the common good return to DC, particularly regarding education and workforce development? So good luck, Danny.
Mute.
Sorry about that. I worked in the United States Senate from 2000 to 2013 and spent some time in the Obama administration as well. And, you know, when I was a young man in the Senate, Senators Daschle and Lott were ranking and minority leader and swapped places a couple of times, but were dear friends of each other. And they ran a United States Senate that was bipartisan in nature. And I think to some degree, what has changed is the incentives that policymakers have to engage in bipartisan and cooperative or collaborative policymaking. You know, back then, the Senator Warners of the world, John Warner of Virginia, or Senator Ted Kennedy, you know, respectful Senator Hatch, men who were truly philosophically divergent in their viewpoints were very dear friends, and could sit down and could negotiate out agreements. Those three in particular negotiated multiple bipartisan agreements. And you know, something around the incentives for cooperation has to change before you're going to see real bipartisanship again in these bodies. On our specific issues related to education and workforce, you know, I think these really shouldn't be partisan issues. These institutions that we partner with are, you know, the heart of the communities where they operate. You know, and I think to the degree that we can make a solid case that we as OPMs are acting in the best interest of those institutions, and those institutions are in turn acting in the best interest of students, we should be able to win at least a fair hearing, if not support from both sides of the aisle. And that's the goal that we're moving toward in that space. When you get down to execution and operation, you'll have philosophical differences around, the role of state administration versus federal mandates and a bunch of other stuff. We do that all the time, so I think that we work those out. But at this point, in this space, what we're trying to do is reach out to both sides of the aisle equally and do everything we can to bring our partners together with the people who represent them.
Yeah, if I just add one thing, it's also divisions within the Democratic Party that are important, because, we're seeing this now with the infrastructure bill, but it's kind of a coalition government that we have on the Democratic side. It's a center-left party, and the left and the center don't always agree. And I think you're going to see that in higher ed as well. They're going to get, pushed from the progressive wing for some changes, but then maybe push back from those who are more pragmatic. And, I think higher ed is traditionally, more allied with the Democratic Party. And I think students are an important constituency of the Democratic Party. So how they kind of reconcile those different constituencies within the Democratic Party is quite important for purposes of, our world.
Great, thank you both. So friends, the questions are coming fast and furious now. So I hopefully don't think we'll need to go to a speed round, but I reserve that right as your moderator. Patrick, I'm going to ask you to maybe kick us off, and then Danny and Greg as you may want to join in. So how often is language related to data breach prevention and responsibility written into contracts? Do you have a sense of that through your research?
No, I would definitely pass that on to Greg or Danny.
Data breach itself as a contract clause, it's sometimes in there, but contract provisions around student data are always in there, and they're really required to be in there because of FERPA. Whether it goes further, and there's clauses about consequences of data breach and cure of all that, that kind of varies by contract, and in some sense it's not really essential to have in the contract because it's covered by other law.
Gotcha. All right. So this one came in through our session. So what do you think about the Century Foundation's research and investigations about OPMs? Their recent one was titled Invasion of the College Snatchers.
I'm going to go ahead and take this one. The Century Foundation is, for those of you who don't know, a think tank. I think it's headquartered in California, but I'm not positive. They have people here in Washington as well. And they have taken the view, they FOIA'd a series of old contracts, and from those FOIA contracts have drawn a series of conclusions about OPMs and our relationship with institutions. We have never actually, the Century Foundation has never actually reached out to myself or to Wiley about the work that they do. They're obviously more than free to write and have whatever opinion they wish. We are not out to college snatch. We believe we are servants of the institutions, and in turn they are servants of the student. And I would love to engage in a conversation with the Century Foundation on their views. That all of that having been said, I think that what really matters are the views of policymakers and decision makers, the Department of Education and our representatives in Congress. And that we're going to provide the accurate information that we know we have. We know, for example, what the completion and retention rates are for our students. We know, for example, that the average rev share agreement for our partners is somewhere between 30 and 40%, not the 80% that comes out of some of those advocacy documents. We know that the principal decisions related to students, how many students are admitted, the conditions under which they're admitted, the decision to admit them in whatever place, financial aid decisions, who teaches, what they teach. All of those core educational functions remain with the institution of higher education, and in a competitive market, to the degree that we're serving them or not serving them well, they can expand our services, or they can go to a different OPM, or they can take it in-house, or they have an array of options around them. As Patrick has pointed out, they can buy, partner, or build, and different partners choose to do it differently along their evolution and relative to their constraints. So one of the primary reasons the Century Foundation objects to the bundled services and the revenue share components of those agreements. And the fact of the matter is that for the vast majority of institutions that are capital constrained, and that's going to be the vast majority of institutions, the only way for them to be able to finance and take the risk of financing an online program is to do it in partnership with us, and where we take that capital risk. And the only way we get paid is if it works. In the alternative, they can try to build it, they can go out to the markets and, I don't know, borrow money to try to build it themselves. If it doesn't work, that's sunk capital. And, you know, we have the expertise of having done this with multiple institutions around the country, can bring and bear that expertise to bear on any new partner. And so, look, I think at the end of the day, again, this is a relatively new area of practice and law in higher education. Most policymakers are new to a discussion on it. And what I would welcome and want to focus on is metrics, things that we can measure and assess the degree to which we are performing for institutions and in the best interest of students. So in the first instance, those are questions around retention and completion. And in the second, those are questions around what happens to a student after they graduate in terms of their ability to move up a socioeconomic ladder. But what I will say is this: if our goal is to take all of America and all of the students who are not currently a part of the ability to move from working class to middle class to wealth, the way to do that is through upgrading skills and education. We're all agreed that that's the way to do that. The institutions to do that through are the institutions we work with. And the only way they can do that is if they have partners with the kind of expertise and tools that we have.
Great, thank you, Danny. So we have another question from Brian, and Brian asks, with various states enacting online education regulations, how is jurisdiction determined? For example, how would the California proposed regulations be enforced when a school is in a different state? What about when the OPM is not located in the student state nor in the same state as the providing school? So a jurisdiction question, this kind of sounds like a great question to me.
Yeah, well, you know, it's a complicated question, but stepping back, I mean, this is kind of why higher ed created SARA, right? So we would have some uniformity in online. And I think it's really important for institutions to support SARA's work and support their standards and improve them so that they work across all the states. But that jurisdiction question, it's sort of hard to answer in the abstract. I mean, it depends, for example, let's say it's California. It depends on whether California has jurisdiction over that institution as part of its regulatory regime or not. And if not, then it becomes more of a sort of long-arm statute jurisdiction question. But it's a fair point that it isn't always clear whether the states have jurisdiction over you. It depends on, you know, whether you're, quote, doing business in that state under either a state or federal test.
So that was a great legal answer. What I would want to make the point that this is in part why it's so important that the federal government and that we get some degree of bipartisan agreement on how these things should work. because
Sure.
otherwise you will end up with disparate law in multiple jurisdictions. And at the end of the day, like we saw with California's privacy law, the California market is so huge that once it makes a rule, it becomes de facto the rule of the country. You can't do business in America without doing business in California. And so, you know, as we move forward, and we engage California policymakers as well, it's critically important that we elevate this conversation, inform it well, and continue to construct the oversight rules and regulations that will inevitably be built around it.
Thank you, Danny. Okay, so I've got one question and I've got another one teed up that is a corker that I definitely think we need to end on. So I'm going to ask on this one that you be maybe brief. Greg, you mentioned that Ed is looking at including in rulemaking, taking more control of reciprocity. So NC Sarah, if we heard you correctly, are you able to expound on the probability of that happening and what those changes will likely be?
Yeah, so just to be clear, it's not certain that the department is looking at that, but certainly some of the advocacy groups are lobbying for that. They never, some of the state attorney generals, some of the advocacy groups, they've never really been happy with SARA because they think that it somehow undercuts their state enforcement efforts, whether that's true or not. But the leverage that they have, I think, those groups over SARA is that SARA's validity comes from the federal state authorization regulations. So if SARA doesn't play ball, then I think those groups are going to lobby the department hard to say, well, you know, legit reciprocity looks like this. So that's the potential battle that I see there.
Gotcha. Okay, friends, this is the one that I think all three of you might want in on. Do any of you have any reason to believe revenue share is actually under fire as opposed to simply the perception that it might be under fire in the future? Fee for service sounds good until a school sees the cost of service, so it really only works for top tier schools. There is so much to unpack in this question. I would invite you to answer any aspect of that question.
I'm going to try and jump in because I'll leave my technical colleagues to tackle the details. But you know, we're kind of fortunate to look across different industries that are public-private, and like rev share, I think people are mistaking rev share for the underlying components of risk, of capital, and of capability. Risk sharing probably being the most predominant feature of a relationship between the public and the private sector in that regards. And it's interesting reflecting on kind of Greg walking through so brilliantly the kind of underlying components. This is very typical of a public-private partnership where you need to find an economic mechanism where you're able to share risk because you're both taking significant risk in the pursuit of supporting one party's outcomes. And the capital component, Danny brought this up as well, which we're all aware of. And so we really promote, I get a bit of heat for saying like a grown-up conversation about the economic model underlying public-private partnerships. I think we spend a lot of time, Century Foundation included, kind of with unpacking it in a very naive way. And hence that's what led us to build our capability framework, is really promote a grown-up conversation. This is about the economics of risk sharing, capability, and capital, and that's how we should talk about it.
I guess I would say I think revenue sharing is here to stay because the fact is it's worked well and it's quite popular across higher education. And I think that the evidence suggests that it actually works well for students as well in terms of getting access to programs. It doesn't drive, there's no evidence that it drives up the cost. And also because there isn't any evidence to speak of that revenue sharing is a problem. There haven't been many OPMs that have gotten into trouble or institutions that are working on this model because the way the department constructed it 10 years ago is pretty tight. So if you follow the rules, it actually worked pretty well. So if you're going to change a policy that's been around for 10 or call it 20 years, you better have some evidence that there's a basis for that, or that policy is probably going to get tossed out in court. So I think it's going to stay. It might get changed a bit, but it works. So ain't broke, don't fix it.
So just to build on both of those comments, so rather than a grown-up conversation, I think what we need is an informed conversation, and I would welcome all stakeholders to participate in that conversation. I do not begrudge and fully welcome the Century Foundation participating in that conversation, or anyone else wishes to participate in that conversation. And ultimately, I think it needs to be based on what public policy should encourage and discourage, what it is that we want for the educational system to create as outputs relative to online programs, and how rule and regulation can drive that. To date, what we see from our perspective is an increasingly sophisticated buyer in institutions. They know what they're doing. They know what risks are involved. They know the benefits and costs of engaging in either a fee-for-service or a bundled service agreement. And they're tough negotiators. And so, to the degree that there's a market failure and some new additional regulation is necessary, I agree with Greg that's something that has to be proven. And, knowing a number of the people who are serving in this administration, I would tell you that there are very, very smart, very, very capable people who want to hear and want to learn and want to be a part of this process. And they want to hear from constituents. They want to hear from the folks who are directly affected by this. And in this case, those who have direct participatory knowledge in agreements and can inform the policymaking process. Those voices would be extremely useful in this conversation.
Wonderful. Well, thank you all. And thank you, the three of you, for your time today. I know I learned a great deal. I'm sure everyone who's on this webinar and who watches it later will learn a great deal. Friends, if you haven't noticed, there have been links that have been shared in the chat, particularly Greg's article for Unbound, an UPCEA publication, as well as handouts within the webinar dashboard that you have, and I believe things will be sent to you afterwards. But to confirm that, I'm going to kick this over to Shandy because she's going to wrap us up for the day. Thank you all.
Absolutely. Thank you, everybody, for that conversation. I'll echo Julie that it's informative and exciting. Yes, there are handouts available in the chat, so I will leave the webinar open for a couple of minutes to give you an opportunity to download that. Do remember that a recording will be sent to you tomorrow, so watch for another GoToWebinar email telling you that you have access to the recording. And other than that, we did not get to everybody's questions today, so we will take a look and see what we can get for you. But in the event that you had a question that you think of later, or want to be sure that we address it, I am going to pop this up right now, and you can email us at edservices@wiley.com. We will do our best to get your questions answered if you send your query there. All right, and with that, like I said, I'll leave the webinar open for another minute for you to all download your handouts. But other than that, thank you, and we'll see you next time. Have a great afternoon, everyone.